Good day. This is the Eye of the Storm podcast with the big picture technical update for the NASDAQ 100 and the S&P 500, and it's being recorded on Saturday, January the 20th, 2024. The markets kind of ended the week pretty much in line with what I was expecting, and much of that being related to the options expiration and more heavily felt in the NASDAQ, although the other, like the S&P 500, the Dow, and the Russell also participated. The S&P not as strongly as the NASDAQ, but still had a very, very large move at the end of the day. Now, I'm going to start here with the NASDAQ. I'm going to start with the cash market. And I just want to review a little bit of what we saw towards the latter part of last week, when we saw that this rally was starting, the buildup was coming, and basically we had a mix of data, a mix of information coming from the Fed, and so I can imagine there was a lot of like, well, gee, what's this going on? Are we really breaking out? Because now we have the SPX moving to new all-time highs. We have the NDX going to, again, new all-time highs, so extending on creating new all-time highs. Both the futures markets moving again to new all-time highs over what we previously have done. Now, of note for me was during the day on Friday, I was thinking if you were seeing these types of moves, I would expect it to come with extremely high volume, particularly if we were breaking out. If we were going to just really start to surge, then I would think all the way along, it would be very high volume, a massive amount of capital being moved in. For the better part of the day, now on my lower time frames, my trading charts, let's say, I have a 1 minute, 2 minute, a 5 minute, a 50 minute, and then I reference also out to the hourly chart. Those are the charts that I'm watching very closely. And what I'm watching within them is the development of via the order flow volume profile, which is what I use. And on that order flow and volume profile, what I get are points of control, value area high and low, previous points of control, naked points of control, naked value areas up and down. And you can start to calculate where the market may be heading. What's the next move on a technical basis, where it can go. Particularly now, the point of control is where the largest amount of volume has to be trading at that moment or in that period. Well, as this market really started to get itself above the upper levels of 17,200, the upper levels of 17,300, crossing over 17,400, I was noticing that the point of control on my 5 minute, my 15 minute, and my hourly chart was still sitting way below. I'm like, wow. And then I went and I looked at volume. I was like, wow, volumes are not really all that big in the futures market. Volumes weren't really all that necessarily that big, even in the individual underlying markets. So I'm like, wow, this is interesting. But then at the very last of the day, the very last half hour or hour, then suddenly the point of control moved up in the NASDAQ to above 17,400. So interesting that the bulk of this volume to move this market as they did happened in the last hour. So how does that reflect? Where are we in terms of the Elliott count? What can we expect from here? So let's get that technical picture updated. I'm going to start with the NASDAQ cash market. So as we came in, and how I left it last week, was that I thought that we're still within now, again, I still believe the finishing stages of a primary B wave. And I discussed last week the high potential that wave B, this primary B wave, is going to go irregular. And in the NASDAQ, it already had. Even in the NASDAQ cash market had already had, because the cash market high previous was 16,764. So the minute we crossed above there, which was back in mid-December, we were at new all-time highs. So in essence, what took place was that we reached wave 3, then we did a 4, and we came back up, and now we're again, once we broke above that high, which was the late December high at 16,969, we were again moving higher into that irregular territory. Now, as I have discussed during the week when I'm talking with the future, that the Fibonacci levels that go with, or that we're given in terms of being the most common when a B wave goes irregular, are 1.236 and 1.382. In other words, what wave B would then trace out would be 1.236 of wave A to 1.382 of wave A. So in other words, here is that A wave. So we're looking to measure out the B wave. How high can that B wave get if it goes full irregular? Well, we see that the 1.236 is at 18,260, I'm going to call it. And the 1.382 is at 19,180. Now, those are still pretty high up, but guess what? They're not getting as lofty as they were when we talked about them when the market was like down here, or even talked about it when the market had put in an A wave back in 2023. I had mentioned them, but they were such far out there and just like out of touch with reality. Well, now we've carved out within the primary B wave, intermediate A and B, and we're in the intermediate wave C, and it now in its final fifth wave is really launching and as it gets up there. Now, other people are going to want to talk about, well, what's going to propel it? What's underneath it? What, are we breaking out? And then we have a great deal more upside. Well, yeah, you could define it as, yes, we are breaking out. And do we have additional upside to do? My answer would be yes. Before all is said and done, I do see that we are going to move to additional new all-time highs. And I think that the cash market will get above 17,400, likely above 17,500, and head on up towards 18,000. Now, is that a forecast? Is that, what's going to propel it up there? That part is the more difficult one, because I think that if we really truly understand the psychology or the characteristics of a B wave, the market can move in a particular direction, particularly this one being up, on negative internals, on negative economic or data. So the data may not support, like, for example, the earnings that we've received so far have not been particularly horrible, but they've not been stellar. And they continue to warn of a period of some difficulty coming up. And so particularly in the banks, we're seeing that they've got more reserves. They're putting together things about what loan losses, et cetera, what's happening there. A lot of other companies, we saw Apple get not but one, but two downgrades. One of them was down to 160, downgraded to 160. We saw the stock drop to $180, but then in 2 days, folks, it's back at 191. Now, what was really behind that? Well, they offered a discount on the iPhone 15 to China. Really? Okay. Or was it we had a big January expiration, a monthly expiration, and there were a lot of positions out there that were going to come off? Maybe the bigger players. Was it manipulated? I don't know. I don't go by those words. If others want to really go on that, that's fine. But, even if it is, take advantage of it. To sit to say, well, it's not a fair market. It's like, well, depends on how you want to trade it. If I trade with them, I can make as much money as I want. If I try to take a stand against them and say, you guys are wrong and I'm going to short this market, I'm going to be giving them my money. So it depends on what is your goal. If our goal is to try to be correct in terms of it's not a fair and orderly market, well, okay, making the statement is fine. But for those that are choosing trading as their means of income, I'm not going to take a stand against this and say, no, I'm putting my line in the sand and I'm just going to start going short and build a short from here, unless it actually is warranted and I'm expecting that move that's going to back it up. Now, remember, again, I was a position trader. I still do position. I am picking up some positions, both long and short, based on what I feel is coming next. But my primary trade is day trading. And there was some serious money to be made. Whether I agree of whether this market should go up or down, when they decide they're going to move it up, that NASDAQ future is $20 per point. And as I try to tell people that come in and join my room, the NASDAQ doesn't move in ticks, folks. It moves in dollars, where suddenly it'll just flip and be up 5, 6, 7, 8, 9, 10 to $20 in one slice. So a lot to be said there. Back to the actual market. So on my daily, we can see that what I've got lined up here is that within this intermediate C wave, it's going to consist of 5 waves of minor degree. Now, yep, maybe some of this internal may change. There still could be 1, 2, or I could put 1, 2 up here, and this is 1 of 3, 2 of 3, and we're just in that 3 of 3 move, and that would suggest that we are going to go much higher now. Now, balancing it out against the daily chart actually perked up and has put in 2 very strong days. That's what's going on right there. Where now we have, let me just see if I can open this up. Man, sometimes I really get to a point with my mouse that just doesn't want to work. And okay, well, this works here. So I can see that I got the 8 going back above the 20, the 20's rising, the 50's rising, the 100's rising, the 200's rising. So all of that is in alignment to continue to go up. So yeah, I still think we could be, this third can be the one that's completing. And then we still get a 4th wave. Now, whether it did there doesn't really seem that way, at least on the daily. If I bring it down, there's a possibility. But of note, new all-time high over that, new all-time high, lower high via the relative strength. Remember what I was talking about before. Relative strength in the market, the relative strength in these pushes, not registering what you think it should. Yep, the market's overbought right now, moving into extreme overbought, but it can go further into it. And it hasn't decided to peak and drop. It could tomorrow, when Globex opens, they decide to take it down. Of note, the MACD, yep, flipped and gave it a little bit of a buy signal right here as we are breaking to new all-time highs. Is that going to be interpreted as a breakout? It may be. Or lower high, higher high, lower high, major lower high. So is this going to just tip over and go kabooey? It might. I'm going to bring this down. Let's go right down to that hourly chart because I want to take a look at what's on these internals. So again, I could put this as the 4. 1, 2, 3, still in progress. So what can we really expect? We finished at 17,311. on Friday. The high was 14. Actually closed at 14. So that was the high, closed on the high. And we might just go burst up, get up here towards the 17,429 to finish wave 3 and then do a fourth wave pullback. So if I were to just play it against what I think we might get, then we're going to drop down to the previous 4. And unfortunately, right now, as this stands, it's all the way down here. So we haven't really, right? If I'm flicking this, 1, 2, 3, 1, 2, 3, 4, 1, 2, 3, 4, 5, and that's wave 3. And then where's wave 4? Going to be hard. On the cash market, it's going to be hard. When we get over to the futures market, it's a little bit more visible. But we're looking at, and you'll see it's somewhere around 17,150. Well, we could drop down 200 points in a fourth wave and still be healthy, healthy, healthy. So again, in the cash, still more upside. All right, going back out to that 10-year, and I'm going to go over to the futures market here. That's the one we all trade. And let's do that same thing where I open it up, bring it in a little bit. Come on, go this way. And bring it down a little bit so we can see there is the cycle wave 3, primary A of cycle 4. We're in that primary B of cycle 4, and I got a whole lot more fibs going on over here. So again, the one thing I did do again is, and I'm going to probably leave it this way now, in that I feel that these are minor degree builds. So before I had put this -4 down here, and again we are in finishing, that would have been -3, -4, and -5, and Friday's action just kind of went, no, it doesn't fit, doesn't look right to me. So again, I moved and I had left this in the cash market, so I just moved it over here in the futures market back to where the intermediate wave A of primary wave B completed at the July 2023 highs. Intermediate wave B of primary wave B completed at the October 2023 lows. So from that point, from 14,347, that we have launched higher in the intermediate C wave to complete. Now, it does help somewhat in that we still could power up. Again, same conversation. If we're looking at in the irregular 4, which truly a regular B wave, excuse me, which yes, that is, and it technically already is going to be declared that. But the question now is, will it get to the normal, and I'm putting quotes around that, fib levels that are associated with an irregular B wave? And that's 1.236 to 1.382. Now, as I'm showing it, here's 1.236, and that's at 18,060. Could we get there? Oh, yeah, we can. We definitely can. Here's the next one, 1.382, 18,860. Can we get there? Yeah. And here, let's just take a look, right? Let me bring this down now to, let's take a look at that a little bit longer on the hourly chart. There's the 3, there's the 4. We're inside. Okay, so what do we got? -1, -2. So we're already in the minute wave 3. And where are we within that? Well, here's that fourth wave that we were looking at. So how's this all going to work out? 1, 2, 1, 2, 3, 4, 5, internal 3, 4, 5, the outside 3. Right? So again, I'm just like 1, 2, 1, 2. It could be 1, 2, 3, 4, 5 of 3. We come down a little bit, we go back up, we get up here, and then swing down to get into this 4. Or it is complete here, and we just started to come down now. And the previous 4th, folks, that's what it is, and that's where it will be. So depending on where, again, we're going to put this. Now, there's 2 things I can do. If I'm going to say this is all of minute wave 3, and I can put it there, or we can run it to there. And let's just take a look. Where would that wave 4 start to come in? All right, so this is the work I do. And I'm just going to go to the existing high. The existing high, look at that, 382, right on the friggin' nose, 17,172. ABC down. Quick, get it done, boom, and then we rally yet again. Don't forget, next week we got earnings, a lot of earnings coming in. Apple's would be the week after, but we have, let's see, come on, tell me. AMD, no, it's not going to come in. And we have AMD, it's not going to show me. But I think we have AMD, Amazon, Intel, Meta, Microsoft coming all next week. Tesla, I think Meta and Tesla are on the same day next week. So we can get that correction in, and then we may, I don't know. But I don't believe that we are complete with the rally. So again, minor wave 5, minute 1, minute 2, maybe minute 3 is done here. Maybe we get a little bit of a boost once Globex opens today, maybe even overnight when the Asian markets and the European markets, but I believe somewhere along the line, someone's going to start selling. And just what I think. We are pretty extended. Just a number of green bars. You know, if you're doing that, on the hourly, we have 1, 2, 3, 4, 5, 6, 7. 7 green bars in a row. So pretty much one from the day before, and then all of Friday shows up green. 6 hours of trading shows up green. Is it ready for a pullback? One would think. If anything, we got, some levels. But this is a little bit weird. Oh, because that's the 100%. I get it. That's 100% for the wave 3, equaling wave 1, 17,403. So wave 3 is not the shortest wave. It managed to get up to 471. So it cleared that. It's now the longest wave. And it could go even a little bit more to really kind of solidify itself and then pull back. So if it starts to pull back from here, there's our expected. Initial 17,286, bringing it back down 17,172. Wow. Who thought that the correction was going to hold it above 17,000? And I think that's what's going to happen. Moving averages all looking pretty good for this thing to continue. But hourly, RSI, nice. Still slight new high, right? Over the massive one that we got there, right? That's the last time. This was higher high, lower high in the RSI. Higher high, higher high. They equaled, but extremely overbought. So look what happened last time. Nice little puke. That was even a stronger puke. We didn't even get up that high. But from where we made that initial high, we had a nice little downturn pretty quick. A secondary high, we should have a little downturn pretty quick. Can we come in? And that I think it would be very healthy for the market, set the stage to get us really going. Now, upside. Well, once I get that fourth wave, whether it comes here or wherever it comes in, then I'm going to be able to put wave 1 over to wave 4. Now, mind you, if this is the top for wave 3, wave 4 cannot break 17,050. I might even have to force it up to there, to that level. That's really the high, which would be 17,060. Can't break 60, 58, 60, because then 4 is overlapping 1, and then it's a no-go. And that's going to leave this all as a big 3, and that's going to be even weirder, because then we're looking at a very strong possibility of a diagonal. Right now, not considering it, but we got to see what happens here to see what it's all going to look like. So that's the NASDAQ. Now, what are its upside potentials in terms of this? Once I do get the fourth wave, I'll be able to fill in some of these blanks. But here's where we have standing resistance via the minor fifth wave and any extensions here in the minute third wave. Minute wave 3 kind of zipped by 17,403, which is where 3 equals 1. So what could be next? Well, you've got these, but in terms of the minute wave 3, 17,844. So it could be really strong. I still think we need to do a pullback prior to the market making that kind of a move. But because if this is going to be 3, and I am again looking for the 4, but if this is going to be all of 3, then we're looking for a deeper. If it's only part of 3, like 3 of 3, and we pull back in a 4 of 3, even getting back down to the 8, which is 342, then taking another run, we might stand a chance. But I'm telling you, for this thing to pile on another 350 points, wow. It's not doing it because of an expiration. There's got to be something else going on for that to occur. Again, I do think we are due. Hourly charts are pretty strong, looking for a pullback here, both MACD and the RSI. So, but we have those. Then we've got this coming up there. Here they come again. Now, this 2.618 for the minute wave 3, that I would not be looking for, not out of this one. In fact, 1.618 would kind of be the picture, but I leave these on because there are periods of time or just wave patterns that 3.6 or 2.618 does come into play. But as far as minor wave 5 will equal minor wave 1 at 17,597. I'm going to call it. Let's round it up. 17,597. So you can basically almost say 17,600 is where minor wave 5 would equal minor wave 1. Yeah. Now, still not getting into the anticipated levels of 1.236 or 1.382. If that is going to occur, which it can within that minor fifth wave, then you're likely going to go up into this level. Then that becomes a possibility. If this doesn't contain it, and we continue to rally, then your next fib level for minor 5 is 1.618, which is 18,377. But it's all going to go on what we count, what the structure is going to be. The structure for sure could, because we're looking like we're just finishing the third up here. A 4 and a 5 to get up there. Yeah. Here. Yeah. All possibilities. But now we're getting fib levels because, mind you, this is uncharted territory up here. Market has never been up here. So we don't have a price point. All we have are fibs. And there are other methodologies, other technical indicators that you can use to get up there. But here is the whole picture. And we have higher. We have higher. C wave. This is out. We're going out to the C wave. C wave, 19,517. Could that take us to mid 2024? Yeah, it could. End of the first quarter? Maybe. But boy, that's got to be like, just like this truly, that daily MACD was truly just suggesting we're just starting the breakout. Me personally, no, I don't feel that. I think we got to pull back. We may still have, we have upside to do, but I'm holding this count for right now. There are other alternatives, but I'm not there to where I'm going to start pulling them in for discussion just yet. I'm following them though. So for right now, I do think we have a little bit more for minute wave 3, and then we pull back. And that's how I think we're going to start our week. And those fibs, again, based on that high, Friday's high, capping it, and we pull back immediately, then we can get as low as 17,172. All right, let's go over and take a peek at the SPX. And let's go back out to that same chart. And it was quite the week. I got to tell you, it really was quite the week. And let me bring this down a little bit. Okay, so there is the all-time high, and I believe it's right there at 4,818.62, and that was on the 4th of January 2022, and that's where we marked these highs, particularly all the way up at cycle degree. Now, there's primary wave A of cycle wave 4, and we're in that primary B wave in here as well. The intermediate A wave of primary wave B is the beautifully gorgeous big A wave. And then this, which does count as an ABC or a double ABC, all kinds of things, is the intermediate B wave. And that puts us in intermediate wave C, which will consist of 5 waves of minor degree. Minor 1, 2, 3, 4. 3 here in the S&P, beautifully extended, beautifully. 3 of 3 a whole bit, all worked out great. So here again, the SPX finally, and that would have been on Friday, jumps and goes to a new, this high was 4,793. And see, let me see what it did there. Yeah, that was the high that the cash had gotten to. Let's see what it did right there. There was 4802. So 4802 on the 12th of January. Still not a new high, all-time high. Finally, on the 19th, we get to 4842. So it just, when it decided to go, it just blasted. Let's break it down. New all-time high for the cash. New all-time high. Look at that difference. There's the high for RSI. Back here, back in December. We correct? So is it a breakout? If you're thinking that this RSI is going to get back up into here, yep, it's a breakout. And I think we're still in wave 3. So could that be the ticket? It could. Daily tells you. Daily picture is looking pretty good. In fact, daily's looking pretty good, right? Ding, ding, ding. And we broke to a new high, and we broke back above the 20 and the 8. Closing at the highs, looking pretty good for the market to fill in all those blanks. Here we have the MAC, same thing. Just, it hasn't even given us the buy signal on the daily MAC. That's very close, but nothing yet. So what are the internals telling us? Caution, caution, be careful. It's to call it something that it may not be, to think that that this is the breakout and the start of something really big. Now, really big though, I got to be honest with you, we're breaking above 4,800. We're about 4,840. We can get up to 4,900. We can get up to 5,000. Is that breaking into something big? Well, yeah, in my book. But where's our irregulars? The irregular is at 51, 30, 30. That was 382, 36, 37. 1.382, 236 that was, excuse me. 1.382 is 53,025. Is that something big? You're starting at 48, another 500 points? Yes. 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 That could be signaling something much bigger is getting ready to begin. The daily's kind of telling us that. These always were still, these daily moving averages Never really. They kind of got flat, but now they're picking up the rally again. So the daily has turned positive in terms of what the picture is. So the daily say, yeah, we're not done yet. But we could get up here, something could happen, we start to come down, and that would be it. But here, same as everybody else, the way I'm looking at it, minute 1, minute 2. Here we have 1, 2, 3, maybe. I know what we're looking at. See, on the cash market, it's really hard to say where that 4 is. But maybe a little bit more, 48.59 in the cash. And then we start to get a little bit more. I mean, we could put some other fibs in there, but I'm going to compare it, and we're just going to go with what the future market is telling us. Right now, because we're still we got a March future. The March future closed 48.69, and the cash closed at 39. So it's about $30 of premium between the cash and the future. So, that's going to start to come in a little bit too as we get closer to March. So, hourly, definitely acknowledging, but check that out. Yep, just because the market cruised into the after hour flat, but overbought. This particular one, that was a much lower high. So, wave 3, nice. So S&P or the SPX does kind of look like, yep, we got some higher numbers to see. Once again, same deal, minor wave 3, minor wave 4, minute wave 1, ABC, minute wave 2 completed on the 17th. So, latecomer to the party here, the S&P. So in 2 days, we went from 47.46 to 48. We went up in 2 days. We tacked on, let's just see, we tacked on 130 S&P points. Wow. And you can see how they did it. This was this was 10 o'clock Eastern. 1, 2, 3, 4, 5, 6. And but see that little tiny red bar? When you're counting green bars, and usually you get one red bar, it resets the count, so to speak. So we could go up. But if we had to think, where could this come down to? Here. If we're running it in, saying, here's the top of 3, there's the previous 4th. That's the territory it can come back to. 48.38 down to 48.16. Not all that bad. And then we start to run again. Now, minute wave 3, 100% of minute wave 1, so it's still got a little bit more, and that's that 48.82, 85 area. I'd like to see that first. Then we get a pullback, which would still be expected to bring us down into here. What do we got above all that? For wave 3, this is just a 3 and a 4, and then we're still going to go up. Like in other words, I'm saying 1, 2, 3, 4 for 3 and finishing 3. Going to be difficult, but we got to leave the room for wave 3 to finish here. Is it going to pull up all the way to there? I don't think so, but it could maybe get closer to 4,900. All right, and then pull back. Minor 618, not the most common. Most common is 100%. You're talking 49.92. And getting a wave 3 and up here and a 4 and a 5, I think those could match out. So in essence, I kind of do believe that the S&P might get close to 5,000. Maybe it stands a chance to getting up into here. But I think the stronger zone is going to be right in here for the 5. Equality, minor 5 equals minor wave 1. 1.618 brings it up to 51.71, but that's, to me, the market's going full of rogue just going, just something comes out, they love it, it all looks great, and they just plow ahead. A surprise rate cut. I don't know. There's so many things. Hourly, nice. The MACD recognizing the rally and did perked up. Higher high, slightly lower high. Yeah, it actually equaled it. Let's say it equaled it. Starting to, so if it starts to turn, then maybe we get the correction now. And again, there's your level. But continued move, I will redraw them, because if this is the 3 is done, we're going to get a 4. Then I'm going to connect 1 to 4 to get to fill in these. Undoubtedly, we will get more levels once that is complete. As it stands, you're looking at 49.92, and then 51.16, and then 51.71. Those are the levels that are still standing. This is related to minute wave 3. Can't say it won't. I got to be honest with you. I can't say it won't. But if I'm thinking that the S&P still has 100 plus points before wave 3 is done, something big's got to happen. So all in all, that's my picture for right now. And this is also going to be going into Monday. So I likely, unless something really strange happens tomorrow as Globex opens, my next update will be an Elliott Wave update on Monday, the 22nd. So let's bear that in mind. So overall, not a bad week, constructive to the count, which does continue. We still have upside potential. Have a great balance of the weekend, everybody. And the next Elliott Wave update will be on Monday, the 21st.